Welcome everyone. This is the London session on TopstepTV. My name is Deeyana Angelo. If you're here for the first time, I've been trading for about 17 years. 12 years out of that I've been trading futures, mainly specializing in crude oil and gold, and also some other precious metals and energies. All right, so I do have this trade in platinum, just running a hypothesis here to see whether we can go down to 1,000 area. But highly likely that we're going to go and revisit IB. But, want to have something in there just for tradertainment purposes. Let's start with gold because I see Teo wanted me to do gold. I'm still battling this cold, but I do feel better, even though I probably sound worse. All right, as always, starting on a very large time frame. Gold very close to the all-time highs, right? Now, I do have some areas around 26.95 and 2700 evens. So I want to see whether some sellers step in there. If not, they're probably going to make another run up to the highs. So we'll see whether we can actually do something with that. On the daily chart, similar picture. So we have a supply that was a little bit reactive earlier this week and last week, but we kept just knocking on the door of the supply, and now we're deep into it. Now, if I was going to make a guess, we're probably going to run the all-time highs and then sort of reverse. But I do have some options levels around 2700s, so that's why there's always that possibility that you could get some sellers stepping in there. So yeah, let's wait and see what happens with that. So I think Michelle was mentioning NQ. Now, one thing to understand about London and equities and also Forex products too, they do this Eurex fake out, right? So they kind of look like they're moving a lot and then suddenly they reverse right after London initial balance is over. So, be careful of that. Eurex exchange is smaller, but it does bring in more volume into it. And that's why it makes it look like it's going to break out. But that's generally what not happen. It doesn't happen immediately. If it does happen, it will typically happen a bit later in the session. London Open, while it does offer some movement, generally is full of lack of follow through. So, something to keep in mind in general. We've got some people from Holland, some people from Georgia. So again, we are global on TopstepTV as always. Okay, so I'm just going to look at the 30-minute chart on gold. We're sitting above VWAP at the moment. That can be a bullish sign. It sort of consolidated a little bit, but ultimately for now it's not doing much. Just trying to break to the upside. So it's still looking fairly strong. It's got a little bit of volume inside it, so it's not too terrible. But yeah, that 26.95 and 2700 evens is what I want to see first. All right, let me have a look at some other things. So let's kill platinum, and let's try that gold. Maybe just a little scalp up to some areas of interest. 2700 evens, nice round number. Again, this may fail. It's London, so it's an out-of-hours market. We still don't have DAX, so we're going to work with what we've got. Yeah, let's see if they can break through this. And that platinum trade is still on the cards. I just want to see whether they can actually reject that initial balance. So I might get a better entry later on. But for now, metals are looking a little bit bullish. And one of the reasons why I pulled off platinum is because gold is pushing, and it can sometimes drag platinum along with it because they are kind of correlated. They're not like 100% or anything, but they can be correlated. So let's see if gold can maybe run the highs. It has been running the highs, like it's been making an all-time high during London, which is nuts. And anytime you're away from overnight VWAP, which is down here at 26.86.4, there's always a chance that it goes down to VWAP, then bounce, and then runs the all-time highs. So those are some of the hypos that I will be looking at, depending on which price we get to first. So if we get to 95s, we get some sellers, and then go to VWAP, and then maybe run 2700s. That's one hypo. Another hypo is that we get up to 26.95, start to crawl into it, and then we're just going to have a chop zone between ballpark like 10 bucks. And the reason why I say that is because we have a couple of core levels there. So we have core resistance to 0 DTE at 26.95, and then some more interest up at 2700s. And then I also have my own average daily ranges high. Let me just grab the exact number there. So I have both London average session range high and the average daily range high up at 27.016. So that is definitely within reach. And whenever you have those very important levels everywhere, you're always going to have a bit of trouble before they make up their minds, right? Okay, so they're trying to push this, so I just added another one here. See if we can get that pushed through. But again, this is nothing like COMEX, COMEX, NYMEX, and the New York Stock Exchange. They have like all this craziness inside them, whereas London is all like, oh, we're awake, but we haven't had our stimulants yet. So yeah, everything is much less crazy. And even DAX, like DAX is the main product that I like to trade during London. Even DAX is not that crazy. It's not like it does these like whoosh, 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 whipsaws and stuff. It's a very smooth product. And the older I get, I find myself gravitating towards the smooth moving products. I'm just going to keep an eye on tape here on gold. I do have my my book map on the other screen. And yeah, there's some sellers waiting up at 26.95. Delta is turned negative, so that's but it's not like very negative. It's like minus 174. That's kind of like, they're undecided right now, very undecided. So let's see if they want to get at least to 26.95. Maybe just to run those orders. It's funny how we don't have more. Some of the products that we trade, we have 10 up and 10 down. This one seems to only have, 100 up, 100 down. This one only has 10. I would have thought that gold is quite widely traded. Now, one thing that I don't want to see around these levels against this current little scalp position that I'm trying to do is buyer absorption, because that would be a terrible thing. Because that means they're just going to shy away from 95 and fall away. But yeah. And again, I'm going to stay on combines until we roll crude oil, because that's my main product. And just the way the week started in crude oil, most of the days are just very non-committal. All right, there are some buyers down at 92.5, which would be session VWAP. And my stop is where? It's just under that. So it should be enough if they decide to sell off from here. But I mean, everything's bullish. Even if you look at the 30-minute chart where these 9 EMAs are. These 9 EMAs, they're not like levels for me. They're just like timing tools, and they're like sentiment feelers. So if we are flat and if it's nothing's happening, the price will be sort of in and around them, and they won't have an upward sloping curve. But I don't use them to like run my trades from them. And let's just start doing my OODA loops or OODA loops, however you want to call them. So 15-minute chart, again, trying to break out of that little Asia top there. Five-minute 9 EMAs also looking like they want to break out. Little upward slope, nothing too aggressive, but a little upward slope. Same thing with the 3 minutes. You see how all the time frames for now are just trying to break out, right? They're all knocking on the highs. They're kind of going above the designated EMAs, and I've just checked 30 minutes, 50 minutes, 5 minutes, 3 minutes, everything looks the same. And just for another cross check, 100 tick chart, again floating up on that top 9 EMA, and the curve is up, but there's no momentum just yet, so they're not pushing on that really kind of micro time frame. So yeah, let's see, let's give it a bit of time. Usually when they keep knocking, at some point it's like boom, and that's your scalp basically. So maybe even just let's just try and grab like 20 ticks or something, you know. Because this is not really an opportunity for a big move up or anything like that. And this is like negative risk reward primarily because this is a disaster stop loss. It is not a stop loss that I intend to get hit. So I won't let that happen. And then if something doesn't happen against your position, and let's say we start to dip down into these 9 EMAs, that's what I mean about like timing tools. I will use them to pull a position off early if the time is not agreeing with what I want to see. So this is a directional move. I would like to see this happen fairly quickly. Just like a little run through those Asia highs, and then we'll be in danger of Asia high stop run and then a reversal. So it is a more of a scalp thing than anything else. They are building negative delta as well, so but yeah, so the interest is a little bit higher up. So come on, everyone get out and push, like Hogue likes to say. Get out and push. What are your preferred levels for metals on the CME cumulative volume? So with the cumulative volume, I just look at it around the levels of interest. So I don't necessarily, because you know that number will change day to day, and sometimes if you're very range bound, you're probably not going to see a lot of negative or positive delta, and a lot of the range bound days have that flipping intraday all the time. So that can be another indication that you don't have a trend. But I suppose if I were to, you know, sort of gun to the head, what sort of cumulative delta I would be looking for, I do want to see it over 1,000 either side. So now if I'm, you know, if I am looking for a trending move and stuff, I would want to see buyers step in quite aggressively and to keep pushing that. Gold doesn't do that much of the zombie rally that equities like to do. So again, it's a different product. But yeah, if I'm looking for a trending move, I want to see positive delta. I want to see delta that matches whatever the move is. Hogue says that delta is congruent with direction. So it's like it means that whatever the aggressive buyers are doing, delta is doing the same thing. Now, here we have a divergence, right? So we do have negative delta, and that would speak into the run through the highs and then a reversal, because right now they're not doing anything, right? So that means they're waiting for something to happen. They want to go and do a liquidity grab, and they just don't have enough juice to take this down for now. So we need to get more juice. Where do we get juice? We get juice at areas that have more contracts. So orange juice up at 26.95 and 27 evens. So let's see if they can go and get it. But someone's got to push. So where are these market makers? Come on, guys. Wake up, have a line. Go to work. So yeah, there's a couple of ways to use delta, and again, that's not like my primary way of using things, but it is useful if you're looking at tape and trying to use it in your some more immediate decisions. So obviously, I have my big orientation points. I have outer edges of value. I have VWAP. I have average daily and session ranges, which actually represent statistical algorithmic averages, and that's why they work so well. And then on top of that, I look at the option flows and where call and resistance areas are. And those get tested. Like whatever happens, they should at least get a test. Now, whether we get a run through them or not, and if the price kind of just ignores it and keeps going, uses it as a springboard rather than a reversal point, again, that's a matter of context. Here we know that we have some all-time highs. Let's actually get away from the 5-minute chart because it's making me too zoomed in. So I want to keep this larger time frame in mind. Yeah, platinum's doing what I thought it was going to do. But hey, we're on gold now. I know more people trade gold, so it makes sense that I would look at gold anyway. But yeah, if platinum goes into a short, I'm probably going to enter it even if we're away from the levels, because platinum is one of those products that likes to trend. So once it makes up its mind which way it's going to go, it frequently just carries on for about 4 hours. So you don't have to be like ultra accurate on it. And they're still drying, like they haven't actually unglued from my entry yet. Come on, guys, wake up. We have a couple more questions. Do you know if there's an indicator in Topstep pivot points standards? I have no idea. I don't really use pivot points. I used to use them as a swing target. Like I used to use the monthly pivot from the supply and demand areas, and then I would run that to the monthly pivot. But let's see, do you have pivots? There are no pivots. I'm guessing they're still working on it. Like, if we have a look at the feature request, which I don't want to do now because I'm in a trade, and this one still hasn't done what I wanted to do, so I still have to keep watching it for now. But yeah, so if you go into the feature voting, see where that's at. I think they're working on it. I think somebody else requested it, and I had like a little glance. And I do think it's like in review or something. Don't quote me on that. Sebastian says, can you let us know how to see the option flows? Well, the difficult way is to just look at option matrices, right? Now that is going to be a lot of data for a lot of people who haven't maybe done options before. And to simplify that, there is a company called Mentor Q. I found out about them from Anne Marie. And just the way they do things, the one problem with them is that they don't have like real-time option flows yet, but I hear they're working on it. So, intraday, you do have gamma flows that change, so you can kind of see that. And they are working on getting the live data intraday. However, at the beginning of the day, if you just have a look at where the calls and puts are, those generally can represent resistance and support areas. So call resistance, put support. They also have this extra thing where they look at a high volume level, and that's a level where you can get like a gamma exposure flip. Now, what's the relevance there? Well, if you have, let's say, positive gamma, that typically means lower volatility on the day, although it doesn't, like, it's not that, it's not like, oh yeah, positive gamma with a range bound day. Doesn't quite happen that way because of the option flows throughout the day, right? It's a living, breathing market that evolves just like the price, right? And it is price based. But it can be helpful if you are getting up to those levels. Like one of the things with that massive drop on crude oil that we saw, whenever it was, I think it was like Monday night, there was an HVL level right at put support as well. And lo and behold, we dropped like a stone, 347 ticks out of hours. So all day, stuck in a 120 tick range all day. It was lovely, just to torture everybody. And then everything's closed. A little bit of news comes in from the Middle East, and they're like, whoo. And what is that? Here we go. Okay, there we are. That's what we were looking for. All right, covered a little bit of my loss there from platinum. That's what I was looking at, right? So this is the typical scalp pop through a high. And now we wait. Now we wait to see what they want to do around 26.95. Christ, this cold is annoying. Now, like I said, one thing that I want to look out for here is a slowdown. Maybe get up to 2700s, but 26.95 is the first area to look out for. We might have some chop zone now in sort of this area. So I'm not going to rush into anything. But that was how I would do a little scalp. So something that's very obvious, you're looking at a high from Asia or something, and then it's just knocking on it, and you have relevant levels above it. So knocking on it. And then suddenly they're like, whoosh. So that's that flush through to grab some liquidity and then mess everybody up because now we're going to reverse. So now you look at tape, right? This is where I like to start using real-time order flow. And, if you were looking at tape and everything else, you would have seen anything. You would have seen indecision, but just putting context behind it, right? That's what matters. So now maybe chop zone between 2700s and 26.95, and then maybe another sell-off from there. Of course, third hypo is that we just keep going. And where are we on the profiles? Let's have a look. Yeah, so next thing that I want to look out for in the TPO profile, we are in a low volume area as well now. So if you look at this visible profile, actually let's go up to a little bit of a higher time frame because we can see it better. So if you look at the volume profile, visible volume profile, let's get rid of platinum for a bit and increase this to full size. I keep forgetting to do this. So look at the volume profile. Now without this, if I was looking at just this area, it's still pretty thin up here, right? And then we have those all-time highs a little bit higher up. So the thinner volume areas can be reversal points, but again, you need to put context. I like to see lower volume areas at the edges of swing extremes. Usually if you have a swing extreme that's going to turn around fairly quickly, it's going to be a low volume area. If it has a lot of volume and you're just like, in a one big D-shape sort of distribution, that tends to be, it tends to have a lot more time inside it. So it means that it's going to take time. They're going to be like, oh, I don't know what we're doing here. Do we consolidate? And then they stay there for like 2 hours, again, just to piss everybody off. And then they make a move. But when you have thinner volume areas, if it's going to reverse, it's going to be fairly quick, right? So that's what we want to look out for here because, 2700 is particularly thin. So there's not a lot of volume there that was printed. So yeah, let's watch out now for that slowdown of price. That's hypo 2. And to see if we can find a short at these levels. And I know for some people that this would look like, oh, Dee, you're picking tops. But notice that I'm not going in right away. I'm not like, oh, yeah, we've got up to things, so now I'm going to pick a top. No, I'm waiting for the price to show me what it wants to do, right? So the way I like to pick tops is to wait for a slowdown, wait for structure, wait for us to break down to, the opposite side or break out if we're doing longs. And that's how you pick tops and bottoms. You don't just go, oh, I'm going to stand in front of an oncoming train and just go poof. So you want to see structure, you want to see slowdown. So right now, if I go down to 100 tick chart, this would be similar to looking at tape and order flow, right? You get a better feel for what's going on. And you can see that they've tried to go underneath these 9 EMAs, but so far they're still holding above it. They're still holding above it, right? So until this kind of turns around and goes lower for at least one candle to close below this structure, bulls are still in control. And there's nothing else for me to do. But I have an idea. I have a direction. I have a location. Now I just need an entry, right? So I have 2 of 3. Hey, Dee, have you looked at copper recently? Yes, I looked at copper yesterday. I'm kicking myself. So, copper. Let's do another chart while I wait for this. Copper. I was in a long copper last night. My entry, long copper, was... I think I went in at 35s from what, so 33, 35. And then obviously I was like, I'm not gonna hold that. And obviously I have my own company account as well. But for some reason I was like, nah, you know what? I'm not sure that, are we doing well on the economy, blah, blah, blah. So I decided not to hold the little swing. Where are we now? Million miles away from it. So I'm like, oh, great. But yeah, so this is one of the things where I used to run my swings like that. But unfortunately now, since I'm not doing that much of swing trading, sometimes I'm like, you know what, I don't want to loss overnight, so let's just wait. Right, seeing some buyer absorption at these levels, slightly below here. And now some sellers have sort of appeared around 26.97, as in like waiting up there. Gonna try and drag bookmap over for a second. I don't know why my whole thing doesn't want to. Screens are a bit weird. So yeah, so they're buyers. Sorry, sellers. Here are buyers. This is buyer absorption. So yeah, somebody's absorbed a whole bunch of buyers, but it's still just ever so slightly pushing. So let's see. Let's keep waiting. So yeah, copper is something that I look at. Now, something that I do every single morning is I have, 4 screens here. So on each screen, there's like all of the products that I look at. And I actually still use NinjaTrader quite a bit. I obviously have MetaTrader 5 as my charting and my own account. And whenever I'm looking at things, I have a whole bunch of different undocked windows to basically see where we are in relation to VWAP and all of that. And then if something is looking like it's moving, I will go to the actual chart, 30 minutes, 4 hours daily, just to analyze that from a larger time frame standpoint. And that way it gives me an overview of all the products that I'm looking at. Now, that's probably not something you want to look at until you have a systematic way of doing things, because it's going to be information overload, right? It's going to be too much too soon, and you're going to be confused over what product to trade. I probably look at quite a few things these days, but that doesn't mean that every single week I will trade all of them, nor that I will trade all of them in that same day. For the most part, it's going to be what looks the best. So are we opening outside of balance? Are we maybe in a neutral day type? Are we maybe looking to break out near the highs like gold did? Are we maybe going into a gap fill setup? And all of that I can just see at like just by like one little snapshot. However, if you're not entirely sure of your setups, your methods, you probably don't want to do that, right? So right now I have DAX, platinum, copper, gold, crude oil, RBOB, which is gasoline futures, ES, YM, and NQ. So I'm watching all of those. But I'm also watching those because we've had some risk off and risk on days, and the relationship between gold and equities in general can give me a better feel whether we truly have a risk off day or not. So if not, then it's just going to be one of those days where you can't really find any correlations, and in that case you have to decide what you're going to trade, and that's where problems start for a slightly more novice trader. Now when I say slightly more novice trader, I don't mean like a month or 6 months. I actually mean people who have been trading for 2 years, because I consider that to still be pretty novice. And then intermediate traders have been at it for about 4 to 6 years, and then experienced traders ideally over 7 years, right? So if you look at any high-level skills, let's go back to platinum actually, because now gold is not quite doing what I wanted to do, and platinum seems like it wants to go down. So let's change the dome to platinum, go down to 100-tick chart. And it's trying to go down. Let's go in with 2 contracts because that's like the same size as gold. And again, disaster stop at 35 ticks. If it starts to pull back against me, I'm going to pull it off. But I'm now looking at platinum potentially picking up speed through VWAP as a sustained auction lower while I wait for gold to do whatever. And this is how I will structure my day. If I have something like DAX, obviously DAX is a slower product, and you know, I do run trades that are a lot longer there. So I would just find a setup, go in, go do something else, go walk the dogs, and you know, maybe rest and whatever. Right now I'm studying for Series 3 still, so I'm in like the test phase. So I'm trying to do like anywhere between like 100 questions to 140 questions per day in like from different sections. So that's what I've been doing. But yeah, if I'm trading a more active session, I will look at one thing, I will get my trade, and then I will move on to something else that looks better. So I'm like, okay, I grabbed some cash there, let's reset, and let's look at something else. And then I will jump over everything to see what looks best, and then I will trade that. But obviously, even so, I still try not to do more than about 6 trades per day. Whenever I do over 6 trades, to me, that's, you know, over trading. So for me, an over trading day means doing 13 trades per day. It's like, woo. Okay, let's have a look at the next question. BM says, hello Dee, I had an account that I held for almost a month, adding $300 to $400 every day, but lost control yesterday and blew it before getting paid. Feels like ages before I could get another one. I try my best not to blow accounts, but keep losing control once in a while. I think holding accounts longer, suppressing natural behavior is not helping either. Can you give me some advice? Okay, so let's talk about this. I mean, everybody struggles with this. So one thing that you can do, you mentioned $300 to $400 every day. So put your daily loss limit that you can now control yourself down to $400. If you know that that is the average that you can get, that is what you should be doing, right? So adding more losses past your average winning day is not the best thing. And that's why you want to make sure that you don't go over that. So that is what risk management is all about. Like, risk management is such a big word, right? Risk management, we're managing risk, but it's nothing more than budgeting, right? So let's say that that you have your weekly allowance. Let's say you're a child and your mom and dad give you your weekly allowance. Would you then spend over your weekly allowance? No, because you don't have enough money, right? There'll be nothing. And that's how you should be looking at, that's how you should also be looking at the risk management, so the daily loss limits and all that. All right, let's sell gold now. Let's try that. Yeah, so some sellers have appeared. If you look at 9 EMAs here, they've gone below. Now we just need sellers to actually step in. Come on, guys. Yeah, so when it comes to risk management, I don't like to use massive words like that. I like to use the word budget, right? So there are a couple of ways that you can control the overtrading. I like to do it rather than monetary values. I like to do it by trades per day. If I know that I have, let's say, maybe a 2R multiples, average risk reward, that I shoot for, I would try not to do more than 3 trades per day. Why? Because if you lose one trade and then you lose another trade, what's going to happen is that you're going to be on the back foot. So you suddenly need to make more than one trade to get you back to scratch if you keep going to 4th and 5th and 6th and 7th and 8th, and you constantly lose 1R. You know, we are assuming consistency here, that you lose 1R and you gain 2R, and you don't mess with the position sizes, so position is always the same and everything. That's how I like to create my risk model. So rather than going, oh, I'm not going to lose more than, 400 per day, yes, I will have a personal loss limit for the day, but at the same time, I will also have a number of trades in mind. So if I've gone, let's say that I do a trade where I didn't read the market very well and suddenly I start flipping and flopping between the levels. So that's immediately I'm off my A game, right? I don't have a clear idea of what I want to do with that level. So that's number one. Second of all, suddenly I'm flopping between buys, shorts, adding paper cuts and adding losses into the mix, or very tiny profits that mean nothing. Again, that is a sign of B game, right? You're slipping off your A game and you're going into your B game. So now we have more trades than you planned around one level. Now you don't know exactly what's going on. So you don't wait for more information and understanding. If you saw Brett Steenbarger yesterday, it was always a great session with Dr. Brett Steenbarger. And if you missed it, actually, guys, we're going to be cropping that session, and we're going to be putting it on Topstep YouTube as a standalone session, right? So don't miss that. Keep an eye on that. It is very, very useful. You can have all the levels in the world, but if your mindset is not there, it doesn't mean anything, right? You're always going to find ways to ruin the account. Now, with the with the blowing up combines, like I said, blowing up XFAs, there's 2 ways. So one way is just to have a dollar amount. I don't like that because I feel that even when I have the dollar amount, I'm then just focusing on I'm not going to lose more than that. But then all of the other stuff goes to shit. Excuse my language. You're off your game, and you're doing stupid things that are triggers for the day going even worse, and then you're sort of using a crutch of the daily loss limit to prevent those behaviors. But what I like to do is to stay aware of how many trades I've actually done. And if I go over my own trigger, which means like over 5 trades per day, I'm immediately like, whoa, I actually have on Ninja, I have another thing that alerts me to the number of trades that I've done. And it actually spews out a message in my face going, you've done more than 5 trades. You are now officially over trading. And to me, that's a lot more helpful than just having a ballpark, daily loss limit. So just staying very aware of your mental side of things. And, that's still not foolproof, because you can still have days where you mess it up one day, you come next day, you still mess it up, and you're always in this cycle. So you really need to identify why you lost control. What was the trigger that led you to losing control? Was it actually losing some trades, or was it maybe the fact that you didn't have a clear direction? Was it the fact that you lost some money already, and then you're looking at P&L and going, oh my God, I need to get that back? Was it oversizing? Did you change your size? All of that, you have to be like super analytical about yourself. And if you can't do it for yourself, there are loads of mentors, loads of people out there who can help you do that. Now, be careful choosing mentors. Obviously, we have amazing people at Topstep. But be careful when choosing mentors. While they are useful, there are some people who have absolutely no idea what they're doing when they're teaching people. And their way of teaching and coaching comprises of, this is a level, now we sell, come on, sell. And that's like their way of coaching people. Like, what are you coaching? You're not coaching anybody. You're shouting out random trades. Yeah. So that's like, that really shocked me when people came to me for coaching. They're like, is there any like voice stuff in your portal? And I was like, no, it's all text-based. Like, it's very kind of university-based. Because whenever you're doing tests and, qualifications for extra stuff in any industry, you're not going to have a mentor shouting at you what you're going to be doing. They rely on you to figure it out by yourself, and then get feedback on the work that you've done. So I've structured my own coaching in that way, rather than just, this is my level, now you trade it, and then go, what have you done? I've also heard people getting shouted at by mentors. Now, I can be pretty strict, right? If somebody's doing stupid things, I will absolutely call you out for that. You come for coaching with me and you do 100 trades in a day. I'm going to pull you up on it, and I'm going to be like, well, what the hell is this? But when it comes to planned feedback, bumping up people's skills and all of that, it's all to do with finding what is not working for you, and then looking at how we can improve that. It's not looking at what I'm having problems with, because I'm going to have completely different issues than you, right? From all I've seen, I actually have quite the opposite problem of everybody else. Everybody else has trouble holding on to trades. I have a problem of holding on to trades for too long, But both can lead to underperformance, right? Because you're not taking profits, and you're looking for a massive R, and that's not good. So you need to find middle ground. Just like taking profits too quickly can harm you, not taking profits quickly enough can also harm you. So swings and roundabouts. So do find somebody who can help you with finding your weaknesses if you can't do it yourself. That is why the coaching services are so useful. And you can also ask for help from our coaches in our Discord on Topstep. We have Coach Jay, we have Coach Dakota, and one of the reasons why we're all so good at coaching people is because we've been there. We know what it's like, and we still struggle with things every day. None of us are perfect. Seeking perfection in trading, that's like a fool's errand. And if you think that you're ever going to be perfect, just abandon that thought, immediately, right? No entry is going to be perfect. There will be drawdown. But ballpark, if you have a zone that you're sort of looking at, and it can sort of work out within about 15 to 40 ticks stop loss, that is your setup, right? That is what we're looking at. Whether you're going to be sniper accurate, or whether it's going to go into your maximum adverse excursion first and then reverse, that's an entirely different ballgame. And super accuracy, sniper type, no drawdown type entries, they're easier mentally, but they are not realistic, okay? And if that's what you're after, the only thing you're doing there is minimizing your own mental discomfort. It does nothing else for your P&L. It won't improve your P&L. It won't improve your drawdown. It's still going to be the same. So if you're somebody who can't handle a position going slightly against you to within the statistical performance that you've exhibited before. Like, for example, I know that my MAE, my maximum adverse excursion, on most things that I trade is ballpark 22 to about 28 ticks. So that means that sometimes my if I'm like in with on accounts that are, funded accounts, then I'm not doing extra risky things. I know that the trade can go all the way to minus 28 ticks before it turns in my favor. So then you have a choice. So then I look at the quality of my trade. I was like, did I go in at the level? And how close was the level in relation to my entry? If I'm not that close, if I'm not within like 5 ticks next to the level, then what's going to happen is that I'm going to be like, okay, so the entry was crap, right? But the idea is still valid. So what should I do here? Well, maybe I can just exit and re-enter. And you have seen me do that many times before, where I just go, that was shit. I close it and I wait until the price pulls back to my level. But I don't change the hypothesis. I don't go, oh, that didn't work, now I'm going to go long. No, I'm still going, well, no, this is still a short. I still have nothing else that's telling me that it isn't a short. So let's just see how we can obtain a closer entry to the reference area, to the reference price level. And then typically that second trade will be the one that goes full target for 70 ticks, right? Sometimes I don't aim for 70 ticks. You saw me do a little scalp here, but that's because I was not near a big area that could give me a huge run up. I knew that we had some areas on gold that can be very resistant and that can bring big moves away from it. So I was just looking for a little scalp through and then a reversal. But now I'm in a reversal that can and does have an inherent profit margin of more than 70 ticks, actually. Because if we go down into mean reversion, overnight VWAP is where the target is for this sort of a setup, right? But in between that, you can have orientation point, like, for example, to fail the auction or do an auction fade. So actually target 1 might actually be initial balance high ahead of VWAP. And then maybe we can have session VWAP that is pretty close and has some orders there. So now I'm matching IB high. So where's IB high? 93.9. Where are these orders? 94.5. Where's VWAP? 94.5. So actually this might only have 94.5 profit margin. So that's what, another 26 lower. So it might not be a full-on failed auction, mean reversion all the way. But those are like orientation things that you can use in your trading. So hopefully some of this will help you to identify what it is that you might be doing. And then to start figuring out whether you're on your A game, are you on your B game, are you on your C game? And Jared Tandler has an excellent way to figure those out. So you can check him out as well. He's another psychologist who works with poker players, high-performing athletes, and traders. And, it's very helpful. Knowing yourself, that's a big thing about trading, right? You're finding yourself, you're going on a massive journey of self-discovery. And I know that a lot of people think that traders are again, excuse my language, dickheads. but actually we are, we're actually pretty enlightened people. I met very few people who are like true sort of, disgusting people and usually they come from the old era, right? Those of us who have been doing the electronic trading, we have to be so self-aware because you don't have the pit. You don't have crazy people pushing you, spitting in your hair and all that. It's a different thing. So we have to be very self-aware. There's nobody else there to stop you from doing stupid things. Okay, there's no colleagues around you. Now we have TopstepTV, but generally trading is a very lonely activity. And a lot of people don't have that sort of support system. So you don't have somebody, during lunchtime to go, oh my God, I don't know what to do. And then somebody says, hey, actually one of the podcasts that I did, James Thorpe was actually talking about how he was in a hole when he was working for one of the exchanges, and it was in London, I think. So one of his older colleagues came up to him during lunch, and he was like, "Hey James, like what's happening?" And James was like, "Oh man, I just don't know. Like I just can't keep adding to more losses here. I don't really, I don't really know what to do." And the older colleague says, "All right, do you want £20? Do you want 20 quid? That's like $20, right?" And he goes, "Yeah, but like why?" "Well, yeah, I mean, I'm just asking you, do you want 20 quid? And he's like, "Yeah, I mean, why not?" "Okay, well, here's what you do. You go back in there, go down to the minimal size, and just try and scratch a trade. Just try and scratch a trade. So you go into, your work. So this is our work now, but back then it was a floor. And you just try to get 5 ticks. So you find a setup, try to find five ticks. Take that. Again, reset, rest, observe, try not to trade in between the strong setups. Another setup comes along, try to take 10 ticks, right? So that's what the older colleague was trying to explain to him. If you do like a bit of scratch trading, what that does is repair your mindset. So right now, what's your name? BM. You now have a confidence issue. You don't have a strategy issue. You have a mindset issue. So we need to tackle that before you do anything. And how do you tackle that? You need to increase confidence in your decisions. And you're not going to be doing that by holding your trades to like do or die, right? You have to take smaller wins to tell yourself that you are actually capable of taking profits. So mindset repair comes first whenever you lose XFAs. And then once you're back, you can go back to your normal strategy, but you'll be surprised how much those sort of little, 50 quid. Sorry, I'm going to sneeze. Oh God. It's a fake out. I know it's gonna get me. I've been sneezing like all the evening last night, so I'm surprised I haven't sneezed yet. But yeah, I tried to sneeze, then I talked through it, and it went away. Oh man. Okay, so yeah, so repairing your mindset is what it's all about. So just take those smaller trades, just to kind of build up your confidence, and then go back to your normal strategy once you've added up some cash, 200, 300, 400. It can add up very quickly, right? And you'd be very, very surprised how much, like taking 5 ticks there, 10 ticks there, 5 ticks there, it can add up. But the problem that I personally have with that is that is one of my triggers. So I personally don't like doing that. I will be perfectly honest with you. Whenever I have confidence issues, I need to find a bigger setup and keep my paws off everything else, and then get 45 ticks. Why 45 ticks? Is because that's my median average for the profit that I take on trades. So if I take all of my trades, most of the time my trades will be will reach 45 ticks. I can understand that some people don't trade like that and they are not able to get 70 or 100. I get 120 ticks from some of my bigger trades, right? But ballpark, if I take all of the trades that didn't quite go to full target and those that did, 45 ticks is very achievable for me. So that is what I aim for whenever I'm trying to sort of repair my own mindset. And again, this is something that never goes away. You will always go through this. However, those issues will minimize. And at the very least, you will get experience of what you did last time that worked, right? So hopefully all of this you can find yourself in what I'm talking about and implement strategies to make sure that you do keep your XFAs and funded accounts longer next time. Certainly longer than a month, right? All right, next question. Trade 43 Dom. How do you decide in London session if you're going to trade or not? Okay, so if everything's flat, if we're not breaking out of initial balances, if we're sitting straight at VWAP, if the moving averages are not sloping, they're just like flat, that's the day when I don't want to trade. Or if we had a very unusual night where crude oil and equities all just went absolutely nuts in one single fell swoop. And then nothing, right? It was London session was very quiet yesterday, so we saw that, and I didn't trade the London session at all. So I mean, I did that that tradertainment one micro because somebody said, "Hey, drop a micro for some action." So I did that, and then that just stayed there. Like I kept going through the session, it just moved nowhere. So that was the extent of action that we had yesterday. But yeah, that is one of the things that I would look for, whether the 9 EMAs are sloping and how far away are we from VWAP. I also look at equi-volume candles over on NinjaTrader to see whether there is volume behind the moves, and then if there's no volume, all the candles are just almost like. Okay, so I'll show you how that looks, right? So this is the equi-volume candle. So very, very tiny little candles when there's no volume, and bigger candles when there is volume. Now platinum has gotten stuck at VWAP, right? So that has died a death. But I'm gonna keep it anyways because we haven't moved away from VWAP. And there's a chance, like sometimes what they like to do in London is that they get glued to VWAP after a mean reversion, which is what this was. So we had sustained auction attempt, then test of the initial balance, and now we're like still at VWAP. But from the larger time frames and from some of the call options levels, I do have that round number of 1,000 in mind before I do anything else. So I want to see them smash through that. Very similar thing to what I did with gold, but it's got a bigger profit margin, right? It's got 48 ticks of profit margin down to the next area. So I'm willing to wait because of the strength of the levels and the type of a setup that this is. So sustained auction, down to VWAP, and now if we can break down and show some weakness around VWAP, then that's for sure going to go down to 1,000. If it doesn't, then we're just going to stay flat here for the next 2 hours, and nothing's going to happen. So that's going to be a very dull trade, and in that case I'm going to pull it off. I don't have a time limit for this outside of the noon in London, which is going to be in about 90 minutes. So I'll see how this goes. If we're still showing some strength at VWAP, right now we're showing a little bit of weakness. It's a consolidation, but if you look at how these candles on 100 tick are created, they're all knocking on the lower side of things, right? So every time we pop up, somebody sells it. We pop up, somebody sells it. And now we have a little bit of a bearish engulfing here happening. 5-minute chart, very messy, right? Doesn't show me anything. 15-minute chart could have a 3-bar reversal on the way, but we're struggling around the nearest supply on the 15 minutes. So why do I say that? Is because we have a bearish engulfing here, some slowdown, and then a move away. What's happening? We're unable to even go into the nearest edge of that supply. So that's generally a bearish signal, right? So if we can't really find confident buyers through it, that's still valid. So until that breaks down, or until we start breaking into it, there's nothing else for me to do. So I just sit and wait like a good old ambush predator, like a little chameleon lizard that I have in the background. All right, let's run to some more questions. Alfred says, what were your influences for that gold sell? My influences near all-time highs, but also call resistance areas, which are currently sitting still between 2695 and 2700 evens. So that was my catalyst for both the stop run through the highs that I ran along from, and also the reversal that we're in now. Now, typically those levels, when they do work, they can actually give very nice extended moves. So you don't have to like nitpick. You don't have to be afraid that they're not going to work out. If there's a reversal from them, they give a meaningful move away. Okay, that's the whole idea behind them. All right. Jonatas Alcovia says, have you looked at platinum trend lines and higher time frames? I don't use trend lines. I use horizontal movement. I think trend lines are very wishy-washy, but I know people who make them work. I don't. I used them when I was a supply and demand trader to match the supply and demand areas, and then over the years I realized that I would be looking at those demand and supplies anyway. didn't need a trend line to tell me that we're at the swing extreme. So I don't use that concept. I prefer to look at the market from a horizontal view rather than a vertical view. And if I am looking at anything else, that would be the volume profiles, which again can show you very confidently where the distribution areas were. And I just have no need for trend lines. So, you know, different strokes, different folks. If trend lines work for you, excellent. But I don't use them because I find them an overload. Okay, this is now on platinum starting to be a little bit more reactive. That's not what I want to see. But I might run just the one contract because we are on a combine, just to see whether we can get some movement away from that VWAP. Now this would be over trading for me. But again, because I'm on the stream, because I'm feeling like clicking some buttons today, we're going to be doing more trading. Obviously, I can't do that in the XFAs because this is just ballpark random level that I'm using. VWAP, I mean, it's not that random. It still has a hypo behind it. But it's just like scalps here, there, and everywhere to bring a little bit more action to the London session with whatever we've got at the moment with our DAX. Yeah, so I don't use trend lines, but yeah. Vladimir says, how do I stop over trading? But first go to the gym before you trade and lift some heavy shit. That would be step one. Why? Because, you know, some people are like, oh, Dee, are you going to make me exercise? Yeah, but it's not because I'm being mean to you and because I'm being like a, you know, drill sergeant or something. It's because there's a biological process that happens when you're over trading. Your fight or flight instinct kicks in. The fuel for fight or flight is glycogen in your muscles. And the thing that kicks it off is the adrenaline that you feel when your primal brain kicks in. So we have the prefrontal cortex, which is responsible for our rational thinking. And then we have our monkey brain, the one that, you know, we evolved from. And the problem is that a lot of the times we allow the monkey brain to do our trading. And that's exactly what's happening when people start to overtrade. I've been there. I call that side of me D-animal. So not just animal, but D-animal. And that's not the nickname that I gave to myself. It was given to me by a colleague from a prop firm. Because I went on a rampage one day and he was like, oh, D-animal is out. I was like, what? And then we had this whole conversation about, you know, fight or flight and blah. So basically what weightlifting does, weightlifting in particular, you can achieve the same thing with like cardio, but it's going to take you like over 45 minutes to actually achieve the same thing. Whereas with weightlifting, you can kind of do it in about, if you lift heavy enough, if you can, it will achieve the same sort of glycogen reserve drain as running for 45 minutes, right? And that's why weightlifting is a little bit preferable. And don't worry, women, like girls, if you're here, you're not going to turn into Hulk, because anyone who's done bodybuilding before and tried to build muscle, and I've done it competitively, we're all going to tell you that randomly coming up with muscles and just, you know, going to the gym, and then suddenly waking up one day and going, holy shit, I'm huge. It doesn't happen by accident, right? It is one of those things where it's always deliberate, right? Whoever wants to build that sort of muscle, especially females, it's not going to happen overnight. So don't be afraid of lifting heavy things, okay? It's very beneficial for health. I wish I could still do it, and I'm planning on getting back to it as soon as my health is back to where it needs to be. Not from this, but from the chronic illness. And I do miss it a lot because I think my trading has changed drastically since I can't go to the gym before I trade. So if you have that avenue for you, absolutely use it, you know. Go do a very nice gym session before you trade. Why? Because you're going to drain the glycogen reserves, and that's going to mean that your fight or flight response is going to be not fully eliminated, but it's going to be vastly minimized, and your prefrontal cortex is going to be in control. That's what we want, right? So that would be step one. Now, step 2, we go back to the budgeting that I was talking about earlier. So set a number of trades per day that you're going to do. Have a clear level and an idea of whether you want to be a buyer or a seller around that level. Okay. And then just work on making sure that you follow one task per day. Let's say, don't do all of them, right? If you're moving stops to break even and then it stops you out, but then it does what you want it to do anyways, commit to the trade, right? Lower your size, widen your stop. Leave it alone. See what happens. Then journal that. What that does is it gives you the idea of how much quality your setups actually are. Are they just nonsense setups that end within 3.5 seconds, or do they have some juice in it? Do they have longevity in it? Have you categorized your setups? Is it a trending day setup? Is it a neutral day setup? Is it a range bound? Is it a partial auction? Is it a slower grind on the day? Like, do you have categorizations for your setups? If not, you need to work on them. People think that trading is just clicking buttons, but this is a skill of data science and reading that data, right? That's all it is. It's not like we add so much emotion into it because it's money, and money is an emotional thing for a lot of people. So they get worried when they lose. It's like, and then what does that do? Kicks off your fight or flight. So now you're not making decisions based on data, levels, and analytics. You're like, I only lost 350. I need to get it back. And then what do? You lose more. It's like, so to stop that, first you need to understand the fight or flight response, deal with it, and then deal with all of your nonsense one by one. So if you're moving stops to break even, stop moving stops to break even. Make that your task for the next 2 weeks, right? Review every day. Did I follow the rules? What was my rule to not move stops to break even? Did I follow it? No, yes, no, yes. And then slowly over time it's going to be yes, 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 yes. So your ability to follow that one rule is going to get stronger over time. Okay? If you're doing other things, like if you're over trading, well, the next step would be only do one trade per day. Do that for a week, win or lose. So at that point, it's not about the outcome. It's about you stopping doing stupid shit. Like, I'm sorry, I'm going to be very straightforward with you here. If you can't follow the rules, you can't be a trader with any sort of longevity, right? So if you say to yourself, today, I'm going to do one trade no matter what. That's not because I'm telling you to forever do one trade. It's to stop you from doing impulsive decisions. So you're teaching your brain to unglue yourself from the outcome of the trade and to follow the bloody rules. I know that we had, at one point, Topstep back in the day had follow the effing rules. That's what it's all about. Follow the effing rules. And how do you do that? It's by setting tasks for yourself one by one and then following them for extended amounts of time. You can even go nuts. You can spend a whole month only doing one trade per day regardless of the outcome. Once you do that exercise, remember it's an exercise. You're not going to be doing that. Obviously, find a quality setup, enter, doesn't matter what happens to it. That is the exercise. But then you can increase that to 2 per day. You say, okay, now I'm going to do 2 trades per day. But then what some people find is that then they go to the other extreme. Suddenly they can't even do 1 trade per day, let alone 2. It's a very interesting thing that happens. They go from over trading to under trading. And suddenly the whole week has gone by and they've only done 1 trade. Well, you've still broken the rule. You told yourself 2 trades per day. You're not following the rules, right? Now, once all of that is set in place, you can then go back to your plans, profit targets, if any, although I'm against them, but never mind, because I think they mess with the psychology. And then you can start implementing things like, follow your daily loss limit or, whatever else you might be struggling with. But that is how you tackle overtrading. It's not going to happen just, oh, yeah, it's difficult. Let's just keep going and keep moaning about it and patting each other on the back. Oh, it's so difficult. Like, no one cares. Yes, life is difficult. Deal with it. All right, let's run through some of the other questions and then we're going to finish it up because I think I'm over time. Can we look at for a good area to buy and go, please? No, because I don't have a good area to buy. I have a good area to sell. So 27 evens and around the all-time highs, maybe. But I don't have a good area to buy. If I'm going to buy it, I want to see a decent pullback and then a buy. Until that happens, I want nothing to do with it. Okay. Sarah Lucas says, I wonder if you could explain how you use VWAP. I'm new to VWAP. Okay, there's several ways. The guy to go to for that is Brian Shannon. He's been on TopstepTV. If you've missed him, I do believe they've clipped that. So go and watch the way he uses it. But a lot of people use it in a couple of ways. I use it either as a level. So for example, if I am looking for a failed auction trade and we have VWAP, then we bounce from it like we're doing in Platinum. That would be a cause for me to maybe run a failed auction trade from a VWAP. So not necessarily getting involved there, but just using it as an orientation point. And then quite the opposite from that, I look for a run through VWAP. Now what we need to see there is for the price to show, like let's say I'm looking for a gap fill that I was looking for in the beginning of the session before we started stuttering around VWAP. So basically I was looking for price to get to VWAP, show weakness, and then build volume to the downside, thereby increasing the chances of that gap fill actually happening. So those are the two ways I use it. Now the third way I use it would be on a range bound day. If we're sort of in the middle, VWAP is in the middle of the range, I sometimes use session VWAP for that. This is overnight VWAP, so they're a little bit different. And then I will use it as a target. Right, so I will look for fades off of the extremes, Dolby style, but probably on a 30-minute chart. He uses very low time frames. For the neutral day trades, I will use 30 minutes. But the premise is the same. And then what am I looking for? I'm usually not looking for a full rotation. I'm just looking for effectively a scalp to the middle of the range. You can use second standard deviation bands for that. Anne-Marie uses those, and she's very, very good at mean reversions from the volatility bands that are based on VWAP. So those are the three ways that I would use VWAP. I know Coach Jay uses anchored VWAP. In the products that I'm trading, I've looked into that. It just didn't work, right? So maybe equities are different. They have, I mean, I know they're different. They have, usually a very strong bias on the day. So the anchored VWAP breakout probably works better for stocks and equities in general. My setups, they do a lot better with a horizontal read, very few breakout trades, and those breakouts typically don't really go very far before you run into that other day trading time zone, and then we sell off again. So yeah, it's a different market. So to me, anchored VWAP for my products didn't work. But yeah, for equities, especially if you're trading equities, yeah, it's great. However, regular VWAP overnight in session, that's how I use it. Final question. Good morning, Deeyana. Will you show us how to use the DMI? Okay, so I'll be honest, guys, I only have the DMI because Robert uses it and we work together sometimes on the Market Talking with Dee, which is now called Trade with the Pros. I think we're calling all segments now that. So DMI is a smush between directional movement indicator and ADX. So basically, if you're looking for a quick run through an area and you don't want to stay in like for an age, what I like to use is a 100-tick chart that again Robert uses. And then to look for the ADX and this directional move indicator to move up. Now, when it moves up, it doesn't mean that it moves, hold on, let me see if you can see that. Yeah, you can. When they both start moving up, that is not indicative of a trend. That's not indicative of the direction. So it doesn't matter if it's going up or down. It shows that the momentum and the whole directional movement is strong. So the lines will be up, right? When it's, to me, I use the columns. So I like the columns, and I'm using pink and blue colors, why not? Traditional. Whenever the lines are falling, it means there's no directional movement, right? If the lines are rising, that means there is a directional movement. Now, whether long or short, you need to have a look at whether we're long or short. So right now, we're short, generally, but there is no movement. So this is now consolidation. So there's nothing to have here. I'm not looking for a directional movement here. I'm actually now looking for the failed auction back the other way. But I'm probably just going to kill this trade as soon as we're off the stream, and then just go do something else for a while, and then I'm going to come back for the next session. All right, guys, that is pretty much it. We've got a little bit over, but I think the questions were so good that, you know, I had to answer everybody. Thank you for joining me here as always. Very intelligent questions. Do click the like and subscribe because it helps us to grow this London session even more. Please upvote the Eurex products, please, 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 because we need Eurex. You can see that a lot of the movement that we get in London is just so meh that we would need to get to about 400 votes, I think. Yeah, 400 votes. And remember, the like that you want is underneath the video. It's not in the chat. That's a different thing. So click the like underneath the actual video. Anyways, I'm going to go off now and try and heal myself from this stupid cold. I will see you again for London session tomorrow. I'm not on fast markets anymore, so at least not for the time being. So I will see you tomorrow for the London session, and then also for Trade with the Pros much later in the day. Take care. Goodbye.